I'm just going to give you some more practice with this system so you can get a little bit more acclimated with the charts and the strategies that I use. Sorry, my desktop is a little bit messy. Alright, by the way, this Logicism, it's a book I've been writing. You might not read a lot of books, but this is probably going to be the best book you'll ever read if you get it. It's probably not going to be due out until I think March of 2013. But anyways, might want to check that out. Binary options go this one. Show you a few. Whoops. Let me just go back. There we go. Okay. So yeah, with this strategy, I told you what everything you're gonna need and everything using the 5-minute chart. All the indicators you're gonna need. You're not gonna use the momentum at all. All it really is doing is taking up space on the computer. So you might want to just click X on those, whatever. Or actually, don't even put them on there in the first place. But yeah. So all these moving averages are basically going to tell you what not to do, sort of. So this right here is saying don't do a put because the MA13 is diverged heavily from the EMA 26, which means it's in a call state. But then you have the doji here, which signals a put, but I don't trade in that way. But this turned around because the SMA 100. But certain levels are very critical as far as like turnaround points. The SMA 100, which I have as the blue line, the SMA 200, which I don't see on this particular screen because it's either up here, down here, somewhere. But yeah, so I'm zoomed out. This is 6:37. This is only 3 hours zoomed out, but really you kind of want to have it be more zoomed out than this. I think I only had it about a little over 3.5 hours zoomed out because I had the momentum on there, so I wanted to be able to see well. So I took the momentum off, but yeah, you just want to be able to see everything. So if you have bad eyes, you might want to zoom in a little bit more, but you're not going to see the whole picture. You really want to get like a whole overview of what's going on as far as the price action, because every day the price action is going to be at least slightly different, especially depending on what pair or what stock you're looking at. And all these strategies you're going to pretty much use on both stocks and forex pairs. I prefer to use all these strategies on foreign exchange pairs because on foreign exchange pairs you're going to get a whole lot more fluctuation in the market. So if you're trying to trade a strategy where you're trying to trade a move in a certain direction, you're going to want to trade foreign exchange more so than stocks, because especially as of late in the last few months, stocks, it's hard to explain this unless you know the strategy the way I do, and no one really does except for me. But stocks, when you have the trade signal set up, it sets up in a way where it's very sideways moving most of the time in the last few months. So you don't want to trade the setups for a continuation of a trend when it's in a sideways trend, even if it does show like a downwards sideways trend on stocks or on anything. But on foreign exchange pairs, generally it's going to show you a more of a steady direction, if that makes any sense. You'll understand, I guess, if you keep at the strategy. You'll begin to see things, notice things. But yeah, so it's not as simple as, okay, the price is going up here. Oh, the price touches the 100s, do a put. The price touches the 50, do a put. I mean, do a call. No, like, you really want to be careful, be mindful about the way it touches it. Like, let's say the price right here is right there. The next bar, the price went up to here. Then you do a put, but it's not like you can wait 3 bars. Like, okay, now the price went up to that SMA 100. It still touched the same price or the same level, but it's very important how it touched the level. Like right here, you have the EMA, the MACD crossing right here. You have to be careful of MACD crossings and stochastic crossings, but especially MACD crossings. And then you have to be careful about the EMA 13 and how it crosses through things. The EMA 13 is crucial because you have bounces. I call it a bounce. Well, most people call it a bounce, but if the price, you don't really want to pay too much attention to bounces anymore. They used to be a great strategy, but not so much anymore. But yeah, if the price makes it so that the EMA 13 like touches the EMA 26 and then rebounds off like it did right here, or it didn't quite touch it, but if it rebounds off like this and then bounces off the EMA 26 and goes up, then that'd technically be a call signal. But here it's not really like that, because first of all, you have that SMA 100. You don't want to trade against that. When it crosses the SMA 100, is dangerous, in a dangerous situation where you don't want to trade for a call. This is not a good idea. But yeah, so right here you do a call because the price crossed the SMA 100 and then touched the SMA 50. You really want to do it here, but I was probably too late on it. Now you also have a cross here, but you have to be aware that because it crossed the 100 and the 50, and it did it quickly, instead of going down to where it brings the EMA 13 through everything, it shows that it's still basically in a call signal or setting up for a sideways, but not for a downward signal, even though it does indicate that it's potentially possible because the crosses earlier cross here, but it crossed like directly here, but it's a weak one because it was sideways, 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 sideways. So yeah, so you really want to look at the price. You want to look at the MACD and stochastic to give you a really good overview of whether the market wants to stay sideways or wants to be more fluctuating heavily into different trends to the upside and downside. So yeah, you do a call here. I chose to do a call here near the intersection of the two lines, which is an even better place when if the price had touched here to do a call, but it didn't. But yeah, that's one trade. You also want to be careful. You want to know, it's a good idea to study candlestick charts, especially dojis and basically hammers. You just want to study dojis and their location at the end or at the top or the bottom of a trend, because they signify the end of a trend, or at least a temporary end of a trend. So yeah, do some studying on candlesticks. It's a good idea. Yeah, I'll show you a couple more of these. Why not? Wow, okay. This is what I was talking about with support and resistance. This is a support. This is a resistance level right here. There's no previous day's close. None of this is going to tell you that. None of these moving averages are going to tell you that. It's a resistance level because the price touched here, and the price touched here again, and it got bounced off. And earlier, before this, it probably did it again, but who knows? I don't have that on the screen, so can't really tell you for sure. But it also did it right here, but it was a little bit lower, so you can't really do too much with that. But yeah, trade signal example would be doing a call right here, because the price is in an uptrend. EMA 13 hasn't pulled through yet, and the price touched and crossed the SMA 100 while in an uptrend. So depending on how far out, this is a 5-minute trade, by the way, USD CHF, 5 minutes from expiration. You don't want it, this particular trade, you don't want to do more than 5 minutes from expiration, because it crossed the SMA 100. You have to be careful with the price crosses the SMA 100, because it has a hard time getting above it after it crosses, sometime depending on the momentum behind the trade, basically. So this particular trade isn't super high probability unless it's for a 5-minute trade. But then even then it's not super high because of the fact that it crossed the 100. This is a super high probability trade. See, it's basically a very similar trade, but now it's touching the SMA 50 instead of the 100. And if you look at the price action, sideways, 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 super sideways, doji, 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 doji. So then you have this bar here. You also, very important, you want to have your economic calendar up at all times. You always want to know what's going on in the economic calendar. The big times you need to watch out for. I'm just going to tell you the East Coast, Eastern Standard Time in the United States. You want to watch out for 9:30 in the morning. That's when when the U.S. market closes. Opens. Sorry, for stocks and everything. You want to watch out for 8:30 in the morning. There's a lot of news events around that time. You want to watch out for 10 o'clock in the morning. A lot of news events sometimes happen around then, but you need to be careful. Just look at the economic calendar. So I think it's going to be forexfactory.com, and then go to the economic calendar. I'll probably just go ahead and put it on here, the website that you go to. But anyways, this is a very high probability trade because it's so sideways. You can see the EMA 13, everything is very converged. All these lines, all these moving averages are converged because they have nowhere to go, because the market hasn't really done anything. See? So because these are converged and there's nothing really going on here, you do a call when the price touches here. Simple enough, right? But yeah, you really want to look for bounces. Certain trades are continuation trades, and see if I can find a couple of those. This isn't one. This is a touch of the SMA 200 on a doji, which is good. I probably traded right at the end, right before the doji confirmed itself. And then I waited for the close took the trade at 7:15. It closed at 7:30 for a call. Successful trade. That's not a continuation though, trade. That's the reversal. A lot of these trades are going to be reversals because those are, okay, perfect. This is a continuation trade. I'll probably stop it after this one. Maybe I'll do one more. The EMA 13 is pulling through the EMA 26. Now, when that happens, you're going to see the pull through right here. Now, you also have to keep in mind that if you see the pull through and then all of a sudden the next bar comes up and closes up here, that pull through that you saw you won't see anymore. You'll be like, oh, it didn't actually pull through, it just looked like it did, right? Because this line is just gonna move based on the close. The line really only makes this full move when the price closes. But so each 5-minute close of the bar. But Yeah, so you don't do a put when this crosses. That's not really the reason why you don't do a put there. It's really because the price really likes to retrace back close to the EMA 13. So sometimes you'll miss out on doing a trade, but it'll be worth missing out just because you want to make sure you have the highest possible probability for a successful trade. But yeah, so this time the price came back here to the EMA 13 as like it's supposed to, and then came down. I didn't trade it because I probably should have, but there's also SMA 50 and SMA 100 right here, and the price has a way of being funny when it has to deal with SMA 50 and SMA 100 coming back after crossing and going back to the upside. So I was just a little scared about that, I guess. But it came down, it confirmed itself, and it confirmed itself that it's gonna stay through the the SMA 50, SMA 100. Then it came back up, touched the EMA 13. That's where you do the put because it's already been confirmed that's going to be in a downtrend and stay in a downtrend for a little while. So you do a put here a few minutes out, and it was at 10:30 that I took this. That this closed. So it's 15 minutes out about. So that's a put. That's a continuation put. Very good one. I'll do one more. Okay, see, this is a reversal. Sideways. Look how sideways the market is. Look at that. Look at all this. Like, this is why this line is drawn here. This isn't where the price closed. I drew the line here to justify why I took the trade. See this level of support right here, just based on price alone, the support. But then not only you have the price here as support, you have the SMA 200 right here, also showing your levels of support. You also have, what is this? This is the that's the previous day's close. You can't really see it because the lines are so converged. But yeah, there's a previous day's close here. You can see as it goes like that. So yeah, it's the previous day's close. And then you also have the SMA 100. It didn't even break under the SMA 100 or the previous day's close. On the close of the bar, I didn't know I was going to do that. That was just made it all the more sweet of a trade after the fact. But really, you trade here hoping that it's going to do, reverse off, not knowing whether it would or not. Ending in a doji just makes it just all the more, great. But the EMA 13 is still above all the other lines here, while the price is down here. And the MACD crossed, but it crossed while being in a sideways movement, basically. So it shows no real sign of a hard movement. But that's why you have to keep in mind to always be on the lookout for the economic calendar. If you saw this move, and let's say it was 8:30. Also, don't make too many trades right before 8:30 in the morning either, unless there's no economic news. Right here, there's probably no economic news at 8:30. But yeah, I might have taken it anyway, depending on the severity of the news. You have red news, yellow news, and brown or orange, whatever you want to call it, news, medium level news. But yeah, if it's yellow, don't. Yeah, it's not usually a big deal. Sometimes they mark it as yellow, but it's in your mind it probably should be red, like a president speaking or something like that. But yeah, that's that one. I said that'd be my last one, but here's another one. See, they're all pretty similar. These are the continuation ones. You have to be careful about how you do, but these aren't continuations. These are simpler, more easy to recognize trades. The ones that are continuations, you have to make sure they're not going too sideways. You want to make sure the EMA 13 is diverging. and that you're not, make sure you're not in the sideways trend, because sometimes you get, I can't see it right here, but sometimes you get the MA13 crossing to the downside, but in a sideways manner, and then you do a put once the price comes up, or whatever. Basically, you do a put when the price comes back up to the MA13, and then you lose because it was only in a sideways trend, so it's not moving to the downside. You're looking for a downside move, but really it's just sideways, so it's just gonna go back up and back down, blah blah blah. And you might get the trade, or you might not, but you want to make sure, if you're trading a continuation, that you're trading in a true downtrend or a true uptrend. But yeah, this is just okay, the price touched the SMA 200 and the SMA 100, all while the price was really just in the sideways movement. You also had, well, no, this is later on when you have the the MACD cross. But yeah, the MACD right here is just really stagnant, stochastic. So you do a put right here, successful trade. 80 something% probability on this one. But that's pretty much it. So yeah, just let me know if you have any more questions. Keep watching these videos over and over again so you can get a firm understanding. Look at all the screenshots, and eventually you're going to go ahead and figure this thing out. It's going to take a little work, a little practice, a little effort, but it's all going to be worth it.